So if you remember, Arthur Hayes was talking about the TGA refill being a net liquidity drain and potentially being bearish for risk assets and specifically for Bitcoin and crypto. Well, he was off by a couple of months, but it turns out that it was that drain, and $700 billion has been drained from banks in the last 3 months. And you've got to consider also that QT doesn't end for another month. So you've got the Treasury that can't spend normally because the government is shut down, and you've got quantitative tightening that still will continue through the month of November, leading to a spike in usage at the reverse repo facility. The rate here spiked, and Fed Chair Powell had to step in and, uh, you know, ease some of the stress. So I'm just putting this in the most simple terms that I possibly can. Why is this important though? Well, because during this period, you might expect there to be some type of pullback from traders and dealers, potentially leading to wider credit spreads, lower liquidity, some more volatility. But, but, what happens when the government reopens? Well, the Treasury General Account will have outflows of $700 billion or maybe greater than that. So, what does that mean for risk assets? Well, potentially a melt up in equities and specifically in Bitcoin and crypto, because Bitcoin and crypto, I think, is much more responsive to these liquidity spikes or liquidity drains, and small caps too. So the idea here is that when the market or when the government reopens, these $700 billion at the TGA will flow into risk assets. That's the idea. I just want to pause there for a second. What do you guys think about that? Has anyone read about the reverse repo, the spike in SOFR? Anyone have any comments or questions about that?
Just one thing to add, in the short term, it could mean spikes in yields if you're into that kind of thing. I don't know how much that cascades into crypto, but it's
Yeah, so
possible.
Josh, something that I've noticed is with the dollar up, sometimes you see Bitcoin up, dollar up. Now, obviously, we're not seeing that over the last couple of weeks, but sometimes these things move in the same direction. So, with yields up since Fed Chair Powell cut last week, 10-year yields up, the dollar up. I think that it might be a good idea to just watch the euro for a little bit more of a breakdown.